Hey guys, happy Thursday afternoon. This is Ashley Weaver with San Joaquin Valley Mortgage. And before I kick off this lending live, I have to say, just got my hair done this morning by my girl, Amber Duarte at Entourage Salon. She did a fabulous job. I'm gonna do a little twirl for you here. Make sure if you guys are new to town and you're looking for a hairdresser, make sure you give her a call. I'll be sure to tag her in this comment so that you guys can get a hold of her. Moving on though, I want to talk to you guys a little bit today about PMI. So for some of you first-time home buyers out there, or even maybe people who have had PMI recently on their home, what is it? Why do I have it? Why do I need it? And is it a bad thing? Because the majority of people that come and sit down with me, they have this negative spin about what PMI is. I don't want it. It's a waste of my money and all of that. Well, I want to set the record straight on what exactly is PMI. So PMI is what we call mortgage insurance, and something that I can compare it to for you guys, like a good analogy that I have for it is, let's say you went to purchase a car. When you purchase a car, they offer you something called gap insurance. A lot of you may know what that is. It's when you get into, let's say you get into an accident or something unfortunate where insurance only pays so much on the car. Gap insurance will come in and pay the difference between what the insurance will give you and what you owe on that car. That's exactly what PMI does for you on a home. So if you come in and you buy a house and you don't want to put a lot of money down, let's say you're doing down payment assistance and they're only putting 3.5% down, same as FHA, or maybe even a conventional program where you're only putting 5% down. Anything less than 20%, that mortgage insurance is going to protect you. So it's not a waste of money. You guys can kind of see where the PMI is actually a value to you, because it's going to give you the assurance that if you guys buy a home, we never know where the market's going to go. So let's say the market goes down and you guys need to sell the home, but you can't for what it's owed. So you guys are probably familiar with that. It's called a short sale, where you sell the home for less than what you owe. That's an unfortunate event, right? Because it does something to your credit report. If you guys, before I continue, if you guys have questions, go ahead and ask. Comment, give me questions. Jamie, if anyone asks a question, let me know. So let's go back to that. So if you had a short sale, you sold the home for less than what you owed. What happens if you have this mortgage insurance on your home is your lender will file a claim with HUD and they will reimburse that bank for the deficient amount. So let's say you owed $200,000 and you sold it for $180,000. The PMI will cover that $20,000 difference so that you don't have a short sale on your home. They got back all the money that they needed, and so you can go out and you can buy a home. It's really important that you guys understand what these things are. If you're a first-time home buyer, or even if you're someone that is buying a home again and maybe utilizing FHA where they have PMI on there, or any conventional program that's less than 20%. Just want to make sure that you guys know the facts as to what it is, what you're paying for, and how it all works. So these are just some of the things that we can go over when you come in and get pre-qualified with me. So if you guys have questions on what PMI is, am I wasting my money, am I not wasting my money, let me tell you, it's a good thing. It's a good insurance to have because it protects you guys in the long run. So look forward to hearing from you guys. If you're ready to get pre-qualified, if you've got those tax returns and you want to come in and see what it would take to get pre-qualified, give me a call, because at the end of the day, guys, remember, I'm going to get you home.